Good morning and welcome to this presentation on the precious metals and gold miners from Time Price Analysis. This is being recorded on the morning of Friday, the 27th of July. Okay, so I'm going to start with a quick run through of gold, silver, the HUI and the GDX itself, and then move on to go through the individual stocks in our strategic miners portfolio watch list. Haven't updated this for a while in terms of a video. The charts are all up to date on the site, but there's really not been any requirement to update it because there's not been anything to do or pending to do. We're now getting to the point where some of these are approaching the long-term targets that I've had for them, so we need to start to pay a little bit more attention. Okay, so let's start with this weekly chart of gold, and going all the way back here to the late 2015 low. I have that as a cycle degree wave 4 low in GC, and a clear 1, 2, 3, 4, 5 waves up here into the summer of 2016. Off that, A, B, C back. So we've got a 1, 2 in place. Okay, now from there, this move up here, I'm counting as the wave 1 of the next degree up. It subdivides into a diagonal. Now, it's reasonable as a diagonal, the fibs are okay, the structure's fine, other than to say to you that diagonals are less reliable than an impulse, and the reason for that is you can count a diagonal as a WXY or various other things depending on its internal structure, so it is not guaranteed that that is a wave 1 diagonal up. Obviously, while we're above 1124, then that is the way I am counting it. If it takes that out, that is completely invalid, is the first thing to say. But giving it the benefit of the doubt as the 1, we then have an A wave down which hit the 50% retrace. That is not the 2, and that has since proved to be the case. But I think it, anyone who thought that was the 2 at the time, it was foolhardy. It didn't fit the structure. It also didn't fit the Hurst work, etc., etc., etc. So we've got an A wave down, a B wave up, which made a marginally higher high than the top of the 1. That's fine for an expanded flat for this 2 that we are still in the final throes of, if this count is correct. And from there, we've got a 1, 2, 3, we're in a small 4, and we should just drop down 1172 to 1176. And that is the expectation that I have for GC, after which we should then move on up in what would be the 3 of 3. And the next area of concern won't come in until 1480, which would be the 1.0 extension, length of this wave, measured off this low here. So if we're getting an A, B, C corrective, then we would expect it to come somewhere between the 1.0 and the 138.2 in here. And if that happens, then we are going to come down and make a new low. This is not in, and we're going to take that low out. That's all mapping way out into the future. So for now, we don't need to concern ourselves with any of that. We're focused on this level here. We want to see the gold come down, hit it, hold it, preferably on an intraday spike and reversal, and then move up. And that's the entry I'm looking for. These circles and whiskers and diamonds and things you see along the bottom are the Hurst work. There's the major cycle low there, and this is the nested circles and whiskers that I'm looking for this trough. And you can see this whisker extends over here. The range, the likely range of time is here. So middle of that is where the circles are in the middle. So we are right in the zone, time-wise and price-wise, for a low here. Now, it's not to say then we can't get, if you look at the alternative count on the site, that we get a B, C, and we come down and this 2 is not yet in. So watch that alternative count. It's on a 240-minute time scale, and I'm cognizant of this cluster over here. And that would be a cycle low here of the, it's the 48-month cycle, which is a higher degree of cycle than this. It does not have to be a new price low. So this low over here that I'm looking for, I'm looking either for a 1 and then the 2, or even the 3, 4 for this, as opposed to a B, C. So I'm not too concerned about that at the moment. I'm just focused on this very immediate setup. But come down and look at that in the daily chart, and you can see there's the top of the diagonal 1. There's the A wave down into that 50% retrace, B wave back up, and then we have an impulse. 1, 2, 1, 2, 3, 4, 5, small 4 here, and you can see we're coming down now this morning. Need to take this low out here at 1209, and we should head down to the 764, 786 retrace cluster. Those are the retrace fibs of this wave 1 up. Okay, so that's what I've got in GC. If we come over now and look at silver, and again, weekly chart, okay? This low here, which was in the back end of 2015, got that as the cycle degree wave 2. Cycle degree is a very, very significant degree. So for instance, the top in Facebook this week, I believe, is the top of the cycle degree wave 1. So that entire move up that we've seen right from the all-time lows in Facebook. So they play out over quite a considerable time period. Okay, off that, I've got this move up here. That counts as a diagonal, 1, 2, 3, 4, 5 into here for a wave 1 up. Wave 2 back to here, and I'll come to that on the daily chart in a moment. And from there, a 1, A, B, and I think we're in the C of the next 2 down in silver. Okay, now if we come over to the daily chart, this is where the wave 2 was, here. Hence, these retrace fibs are run from this low to this high to give us the retrace. Reason for that, we had an intraday spike and reversal on huge volume, and that spike, price spike, is not showing from my data provider on my daily charts. It does show on the lower time frames from there. For some reason, it's not being picked up on the daily time frame. So I'm having to force the chart to do what we want it to do. Hence the diamond where the 2 is. That's the level, the 886, and that was an exact hit intraday, despite the absolutely enormous move down and straight back up again. It was an exact hit on the 886 retrace of all of this move up. So I think we've got a 1, 2 in place, and then another 1, A, B, C for the B wave, and we're coming down now in an impulse for this C, target 1475. Okay, so if I now come down again to the 240-minute chart, and just off the top of this B wave, we've got a 1, 2, 3, 4, 5 for an A. It's as a diagonal count, sorry. B up, 1, 2, 3, right into the 1618. A, B, C, and we're looking for this 5th down here now. Okay, so target is the 886 back, and you can see the these fibs down here are for the diagonal, the 1 length of the 1 projected off this 2. So anywhere from excuse me, let's clear these up, 1470 through 1494, but ideally 1474 here for the hit on the 886 again. We do get deep 2s in silver, so no problem with it being such a deep fib. And then up is what I'm looking for. And you can also see here the MACD for the A wave is normally, if this is a straight impulse, this is where we would expect the technical readings to be much, much weaker. Whereas the most oversold technical readings on the MACD were here. We're getting divergences as we would expect to see. And I expect to see another divergence here on this low and then up in silver. So that's what we're looking for in the precious metals themselves. Now, if I come across and look at the HUI is the gold bugs index. And again, this low here in January 2016 is the cycle degree wave 2, straightforward impulse up for the 1A. Then I've got this A, I'm looking at a B, C, and then down. It is possible in the HUI, if we drop straight down here, 148.65 to here, that this too would then be in here. Okay, so very difficult to be certain because of this move here. It's all just complete overlapping gorp on all time frames, so it makes the count very difficult and slightly less reliable. If we're going to get this B wave straight up, we're right at the point in the HUI where it needs to turn now. We're at the 886 back, drop below 160.44, and I think we're going to come straight down to 148.65 and possibly lower. So keep an eye on the HUI. If I come across and look at that in the GDX, and again, cycle degree wave 2 low in it was in early January 2016, 5 up. A, then I've got this A, W, X, and I don't think this B's in. I think we're going to drop and take this low out and just tap down a bit lower before we get a B, C in the GDX. Now, if I count the B as here, and that's what I'm giving this the benefit of the doubt on the lower time frame charts. So if I come across to the daily chart, there's the A down, A, there's the W, X, A, B, C for the Y, for the B here, okay? A, B, C for the 1 up in a diagonal for this for wave 1 of the C of this B wave. A, B, and we're coming down now in this C wave. 2110 would be the target. It needs to hold, the absolute must hold level for that count is 2083. If we drop below there, we're going to go down to at least 2015 and quite possibly 1937. If this just lets go, then we're already coming down here. It's not what I'm expecting. I'm expecting a B, C in the minors. Okay, and that can be while the metals make a 1-2, by the way. So the fact that the counts are not completely aligned, they work in sympathy, but not in complete lockstep with one another. Okay, if I come down then and show you that on the 240-minute chart, and just tidy that up, you can see this is the this 886 here at 2110. We're just looking for this final 1, 2, 3, 4, and drop down in the 5th here. Take out this 2083, and then we need to look at the Alt B below us in the GDX. Okay, so let's come over and look at the individual stocks, and we've selected a number of stocks. We're not going to build a portfolio of 50 stocks, 60 stocks, God knows what. I'm personally only looking for half a dozen, maybe 8 at most for my personal portfolio in the sector, and the potential on these is huge. The difficulty is trying to get in with an acceptable level of risk. These things can move 30% in no time, and I don't really want to be taking 30% drawdowns on uncertain patterns at all. So I have been fastidiously patient and cautious for 2 years now. I have not called a bottom in the miners or the mining stocks in all of that time. Whereas I know that many have, including I've seen stuff on Twitter from people that really should know better. This was a 1 and this was the 2 in ABX. Really? Absolutely not. And then people that put those sort of counts out, my honest advice to you, just put them on ignore and walk away. Okay, so what we've got in ABX, there's the cycle degree wave 2 low coinciding with the low in the GDX back in December of 2015. ABX by market cap is the biggest constituent of the GDX. So it and NEM are the biggest 2 by market cap, and where they go, broadly speaking, the GDX is going to go. So we have to keep an eye on these two. I personally also like this stock. It's one I want to own. It's one I've owned in the past. I got the majority of that move a few years ago, and I'm looking to play it again from the bottom of this too. So the targets, and they've been here for a long time. Nothing has changed in almost all of these charts that you're about to see today. If you go back to the previous video, which was some months ago, nothing has really changed. The patterns have just continued to develop as we anticipated. So the 618 here, 10.01, that is the most likely target. It is also where the 138.2 resides. So I've got an A, B, and then this 1, 2, 3, 4, and we're coming down in the fifth here. So the A to C relationship, the most common two are 1.0 and 138.2. And again, just real basic, you know, Janet and John go doing Elliott wave page 1, chapter 1 stuff. A wave down to the 38.2, textbook, okay? Was never going to be all of the two. The structure of it says no, the time it took says no, the cycles said no, and we expect an A wave to come to the 38.2. Straightforward B wave back that hit a retrace fib here, and then you would look for a 5 wave move in the C wave to the 618. And you look for confluence between the retrace fibs and the A to C relationship fibs. The 138.2 and the 618 have lined up. That has been since this point here in January 2017. So from that point on, 10.01 was the very high probability target in ABX. So that's where we're going, I think, next. If we take that out, there's no support until 8.17 to 7.94. So if I come down now and look at this on the 4-hour chart, and I'm sorry this is all very sort of squished in, but I need to get all of the subwaves. You've got to look at every single piece of this and make sure it stacks up if you want to optimize your entry in something like the mining stocks. So off the top of the B, I have 5 down to here for the 1, and you see the structure of that. An A, B, C up for the 2, then a 1, 2, 3, 4, 5 for the wave 3. And if I then come across here, so the wave 3 here was an exact hit on the 1618 as we would expect. Okay, then A, B, C, there's the 1.0, there's the 786. That's where we expect the 4 to come. Here's the 1 of the same degree, nowhere near it. 1, 2, run these fibs, length of the 1 off the 2. We just coming under the 2.0 fib here. We've hit the 223.6 for the 3. I'm looking for a 4, 5 to finish this off next, and then up in ABX. Okay, so we do need to see the 4 to start to give us the divergence we'd look for on the MACD at this low, and then up in ABX. So if you want to put alerts on your system, I would set them at around the 1075 area. Start to see that. That's when to start to monitor this on the lower time frames and look for an entry. Personally, I want to see the fib hit and then bounce off it. That would then get me long the stock. I'm not going to use leverage. I'm just going to buy the stock. And if we take it out, I'll stand aside. I do not want to take a 20% drawdown. The next fib level is here, okay? And I do not want, if we take this out, so we come down here, start to bounce, and then it comes and takes it out, then I'll stand aside for break even or a small loss, rather than sit there on a 20% drawdown. And bear in mind, you know, nothing is ever guaranteed when you are trading or investing. You work on the balance of probabilities. So there is no guarantee if I sat through that 20% drawdown that I'm then going to get what I want. So why risk that money? Takes this out, then that's the next level of interest. Stand aside and be patient again. And again, you know, you look at these moves that we're expecting. Just the wave 1, we're expecting to go up to $26 from 10. So, you know, 150% gain on your capital for the wave one. Now look at what happens when these move. It's rapid. That was a 6-month move. Okay, the correctives tend to drag out forever. So that is worth having. Yes, I'll sit through this, probably with taking some off and probably by using options on the GDX itself to hedge with. Then look, 60 is where we're aiming for the 3 of 3, not even the 3 itself. So the patience will be well rewarded in the end. What I don't want to see people do is sit on losses and lose sleep and all the rest of it, because all of this can invalidate. You always have to be aware that I or you or anyone can be wrong and you can simply lose your money. So absolutely manage your risk, and especially in this sector.